What is going on, everyone, and welcome to the channel. So today we're going to be talking technical analysis. It is something that I think has helped me absolutely tremendously over the past, I'd say 15, 18 months or so in my own trading. It's literally allowed me to become consistently profitable with a solid, sound strategy. So we're talking technical analysis here in this video, and I want to go through the basics of technical analysis for those who are brand new, but then also how I do my own technical analysis here. So the things that I look for, I have a list of about 6 or 7 key pieces, and we're going to do technical analysis on a fun stock that a lot of us have been talking about, a lot of us have been watching at least recently, and that stock is NEO. So what I'm going to do is I'm going to go to a bigger screen so we can get a bigger chart in just 1 second, and make sure you have the playback settings as high as possible, because I know it's a little bit small, but we're going to make sure we can see this on a bigger screen or a bigger kind of chart setup, and we're going to dive through NEO. But first, if you are someone who is brand new and you want to have a place to kind of do some technical analysis for you, that could be a great place to go learn. That would be right here on finviz.com. There should be a link down below as well, or you can just type it in online. I'm going to get myself out of the way a little bit here so we can see things a lot better. And then we're going to start diving through some technical analysis back on Webull. That's a platform we're going to be using. There's also a link down below to get access to that, and also get an awesome sign up bonus to get 2 free stocks when you sign up and deposit $100. So here it is, and they're going to give you guys some lines. They're going to give you guys some simple moving averages, and on the free version, you just get access to the daily chart, and then you have some awesome information. We talk about this a lot in all my videos, so if you're not already subscribed here, make sure you do so you don't miss some awesome videos when we're going up to date talking about different strategies, different stocks to watch, and different kind of swing trade ideas, because that's what we're all about here on the channel. So like I said, they're going to give you guys some good, at least a good basic start. It's kind of computer generated, so you know it's not going to be perfect, but again, technical analysis is not perfect. Understand that's one of the first things you have to understand is that TA, they call it TA, technical analysis, it's not perfect. So let's pull up NEO really quick here on Webull. Now we have a big fat chart. And what I like to do technical analysis on, and you can do this on any time frame you would like, and we can do different time frames, but we're going to start off here with the 1 year, 1 day chart. So the daily chart, as I like to say. And what we're going to have is we have some indicators up. I have a video, I think, back from a while ago about indicators. Briefly, I don't really use many indicators, to be completely honest with you. These are the 50 period and the 200 period simple moving average. I just like to use them for support and resistance. But that gets into the first part of technical analysis. What is support? What is resistance? And identifying where you can see support and resistance on a chart. Because in my own trading, I will tell you, when I have gone from kind of the thought process of, fundamentals are important, right, for long-term investments. But really, when it comes down to trading and identifying risk reward, it is all going to come back. I'm going to tell you guys this right now. The way I trade, which everyone's going to have their own style and strategy, and you mold things how you see fit, but it all comes down to risk reward. And where is your best risk reward going to be? When you're buying as close to support as possible and you're looking to sell up into resistance. If you're buying at resistance and it gets rejected, which we'll talk about, then you can screw yourself if it doesn't break out. Now there's breakouts, there's a whole other side of things. But really quick, so NEO, look at this. Where is support right now? What are going to be some areas of support? Well, what we can do is, and how we find support is, first off, we look for areas on the chart that the stock has come down to multiple times and has bounced off a certain area. So I note to some people, it's like, they don't understand how this stuff works, and it really does not have to be that difficult, and it comes down to how you see fit. But what am I looking at right here? I'm looking at NEO for the past couple of months, and I see right down here, I can see this little drop down. We zoom in a little bit more. I see this candle came down here on the 10th of November, down to about 38.20 or so. The day after, it came close. A couple weeks later, we came down to about the same area, and then we kind of came very close again around a couple of days after that. So what is that telling me? That this area, this 38.20, this 38.50 area is support. So what I'm going to do on Webull, and that's what I'm going to be using, like I mentioned, I'm going to draw a horizontal line roughly at that area. So now we have a horizontal line drawn in, and it doesn't, you can do the horizontal line instead of the trend line. This way it'll just completely just put it flat at that price. And so now about 38.08. Now, when it comes to support and resistance, one thing you also have to understand really quick is that trading is an art, it is not an exact science. So just because we put a support line right here and a stock falls below, there's going to be plenty of examples of stocks that fall below support for a second or two, for a little bit, for 1 day, and then come back up. And it does not have to be a specific line in the sand. Be a little bit lenient on that, but But at the end of the day, it comes down to how you want to play things and how we talk about trading here on the channel. When I talk about trades, we of course do this stuff first. I do this stuff ahead of time, and I'm saying, hey, you know what? If it drops below, for example, on NEO, right? This line's right here at 38. If it dropped down below 37, I would give it like an extra $1 leeway. Below 37, I'm not a big fan. I'm going to get out. I'm going to cut my position right there. So I'm looking to add into this position as low as I can. And what did I actually do? Well, this is actually one of the trades I recently made, is I actually was able to buy because I noticed the support, right? And I was able to buy as NEO came down here under $40 is where I bought. And I bought some NEO. Now, I left some cash available in case it came down a little bit lower to add into my position, but I was intending, and I did it, and intend to buy at support. And then I ended up selling once we broke out over the prior high, which was resistance. So now that gets us into the resistance component. Now, when you obviously, like if we're here, right? If we're sitting right here back when I was trading the stock, right? I was buying it here. I obviously didn't know what happened in the future. So how do I determine resistance? How do I determine where it's going to go, what I'm doing? How do I outline a trade? Well, the way that I outline this trade is that I'm buying this thing down towards a support line, and I would give it down to about $37. So if I start buying under 40, I'm giving myself a couple dollars to the downside. I'm accumulating in that couple dollar range, and then I'm looking for more than a couple dollars to the upside. So I was looking for NEO to eventually bounce off this level and come back and retest these highs, because NEO had NEO Day, one of their events where they released some new information and some new kind of outlines for what they have coming forward. So that in the next month or two from where I entered this trade, I was like, hey, I think there's a lot of good stuff behind NEO. I think it should make a nice run into that. And that was the thesis on top of the technicals already being in place. So right off the bat, we're going to have resistance up at that 57. That's the prior high. That's going to be resistance. Now, another thing to note here is that you can also draw in trend lines, and that's another whole component as well. But resistance works the exact same way as support, at least the way that I see it, right? So if NEO, for example, had come up and, maybe this candle right here was up around 57, and it came up to 57 again, and it came to 57 again, and it kept bouncing off that point. Well, if that was the case, well, we clearly have 57 as a resistance point, right? It's the same exact thing as support, just the opposite. The tops of the candles, the tops of the chart, right, is like, okay, NEO's not going above 57 for whatever reason. That's resistance. Now, what you can also do is this gets into the next point here is trend lines. How do you determine trend lines, downtrends, uptrends, all that stuff? So let's start drawing some. Now we can kind of look at what NEO's been doing as of late, and I can identify right off the bat without even drawing them in. I can identify a few trend lines that I can put in right here. And as you do this more, you'll be able to do this, and so it's going to make it a lot easier as time goes on. But we, of course, saw Finviz had their own trend lines. I'm going to draw some of my own. So back in here, right, back when I entered my NEO position back in there, I'm going to go to the trend line tab, and I'm going to say, okay, I'm going to draw, and I'm going to see if I can connect 2 to 3 or more candles, right? If you can connect the bottoms or the tops of 2 or 3 or more candles, that's a valid trend in my opinion. And so what I drew is I drew this trend line right here. This was my downtrend line. And so what we like to see is that, look, we have this candle right here, 1, 2, 3, 4, and then we had a 5. So we had plenty of candles hit that downtrend, and it was very easy to connect those tops, or it's the exact same way on the bottoms. Connect the bottoms. Now, it's not going to be perfect every time. Sometimes you'll be a little bit off. Sometimes you'll connect the wick. Sometimes you'll connect the bodies. It's up to you and how you see fit. Everyone's going to have their own kind of way they draw their trend lines and how they like it, what works best for them. But right there, that's connecting multiple tops, and that's telling me we have a valid trend here. And you can do the exact same thing for support trends to the upside. It's the exact same thing. So what I saw is, okay, we had support down here in the upper 30s, and I started to see this downtrend. And I drew this downtrend out even before we got to the, even before we got this green candle here on the 15th. I drew this downtrend in, and I said, okay, here's the downtrend. We break up this downtrend. That's a bullish reversal. It's now showing we're breaking the current trend. We're reversing out of the current trend because we are no longer respecting that downtrend. And that's usually a bullish reversal. Obviously, if there was an uptrend and we cracked the uptrend to the downside, that's going to be a bearish reversal to the downside. So that's how I see trend lines. I try to connect the tops or the bottoms of multiple candles. If it's at least 2, usually 3 or more. And so we can do the exact same thing in terms of uptrends. And now it's going to be a little more difficult to see. Let's see if we can draw something in here. So let me connect some of these candles. Yeah, we can do something just like this. Now, again, this is showing you why it's not perfect, because we had this candle right here on the 29th that dipped below. But roughly, we have a candle here that we kind of can draw from the bottom. Boom. And then now we're kind of bouncing off this area again. So now we have a valid uptrend in my opinion, or a rough uptrend in my opinion, with support to the downside. Now we also have this 50 period SMA, which is also acting as support. As we see that, look, NEO bounced, it came down to this blue line and it bounced right off it. So we can see by that wick, that just means that the stock bounced off that line and ended up closing that day at the top. So the green candles, the hollow green candles, what it's showing is the bottom is where it opened on the day and the top is where it closed. And the wick is kind of the range of where the stock was trading in the day. And then of course, where it actually closes, where the full body of the candle closes, that's where the stock was opening and closing. And so the red, which means it was down, means it opened up here. For example, these solid reds opened up here and closed down here. Now, some of these other types of candles, like the solid greens and the solid reds, means it was an overall red day, but from the open to the close of the market, the actual stock went down on a green solid and then went up on a red hollow. Not to be super confusing, that's just kind of the candlesticks that I like, but that's just briefly kind of what it means, because there's stuff that happens in the after hours and the pre-market hours that kind of can shape how the stock sets up for the day. So now you're hopefully kind of seeing trend lines, or seeing support, you're seeing resistance, and now, okay, what's next? Well, I want to talk about consolidation and some more types of patterns. So what we kind of have, and we can even draw a quick one in right here, another trend line I think we can kind of see, roughly, nothing crazy, but kind of a rough trend line right there. We only have two tops to connect for right now, but that's your trend line for right there. But we want to look back to the left and we can see some consolidation patterns really, really nice. And what I like to do for consolidation patterns is I'll go into Webull here and I will actually go into this tool and I'll go to the rectangle. So we can actually kind of see things nice and easy. And we can see a couple of them. So right here, for example, how we have this area right here, and I'm going to kind of highlight it with this rectangle. Boom. To me, that's consolidation. So we had a prior push up. And what does a consolidation mean? It just means we're kind of bouncing around, we're hovering, we're consolidating in a range or at a certain point or at a certain level. We're not really moving too much. And that's what we're seeing. And so we can even go back and we saw consolidation even prior to that. And we even saw consolidation prior to that. And so these consolidation patterns or these consolidation trends, what are they kind of showing us? Well, we consolidate for quite some time. Then eventually we break out either to the upside or to the downside of that consolidation. And so you can draw support and resistance in here as well. So for example, let me get rid of this consolidation box right here. But what is this showing us? Well, we can come in here and we can draw a trend line. Well, we have a top line resistance up around this 2260 or so. We can draw that guy in, and then we can come back and draw in a support here right up around 2060. So we have about a $1 range that we have support down around 2060, resistance up around 2160 or 2260 or whatever it was. And then look, the stock breaks out in either up or down. Now here in this case, it was a bullish move, so it broke out to the upside, and then we get the bigger breakout to the upside. So that's kind of showing you consolidation breakouts, how that consolidation looks. That's what I like to do when a stock makes a very big run. So for example, right, we've been seeing NEO making some big runs, right? And even prior to that, it had made a pretty big run from sub $5. I wanted to see consolidation. I will never trade a stock that's run up massively, and I'm never just randomly buying a stock up here because I like the stock. I am buying a stock after it consolidates, it cools down, shows me, hey, here's our support. For example, right, NEO came down here, said, hey, $11 is our support, and then it started to push up. And so then I can start to give me some time to see, okay, it looks like $11 is holding. Okay, it looks like $20 is holding. That's where I see support. Let's see if I can enter a position here with a stop loss just below this level, and then that's how I'll play things. The next technical indicator or technical pattern that I want to talk about is actually a bull flag, and we can kind of see that, which we drew pretty much right here. And so why is it a flag? It's kind of a triangle shape. Everyone's going to have kind of their own take on how they see flag patterns and whatnot. But what do we see? How do you determine a flag pattern? And we can see a couple flag patterns actually forming right here. Well, we have the kind of flag pole. So look at this. From when NEO kind of pushed up here to the 25 area, down to 26, it had this kind of pretty nice extension move up. Very nice bullish move up towards $40. So that's a pretty big move. But there's your pole. Then we have what we kind of see as a consolidation bouncing around, and we develop, right, bottom support, and we have a downtrend. So we kind of have what looks to be like a flag. If you were to wave this thing, you can actually kind of, see a flag shape kind of determine, coming out of this. So let me see if I can draw some lines in here so you can kind of get the sense. So here's your kind of pole, and then we have this triangle up top, right, that we can kind of see right here, and that's your flag, right? You're waving the flag, that's your flag. Now we can see these flags set up, and obviously they don't always have to be, bullish bullish bull flags. They call them a bull flag because usually we have positive momentum, we have a consolidation kind of range, and then a breakout to the upside, which is exactly what we saw. And we can even see, we're seeing the same thing happen again, right? Here's your kind of flagpole. We're consolidating, kind of downtrending, but we have some support that's being held up, putting in higher lows. And ideally, if NEO breaks back up over 60 bucks, it'll probably make the next leg up and it will break out of this bull flag. Of course, the more times you see the pattern pop up, the higher the likelihood of it, eventually breaking. Like the pattern's not going to hold forever, but it's a great helpful tool to kind of start to see what's been going on, what's NEO been doing. It kind of makes these runs, consolidates, and then it breaks out and consolidates, and then does the same exact thing. So it's been kind of doing that for quite some time, and that's an example of a bull flag. Now, the next technical indicator is going to be volume. So we see on the bottom here, and you can actually overlay volume plenty of different ways. The way that we have it right here is that on the bottom right here, we have volume. On green days, we see green bars, and on red days, we see red bars. Don't worry too much about the volume color, just worry about the actual numbers. And if you look in the top right here, I know it's small, but if you're on your own platform, it should tell you at some place or at some point, right, the volume. And so what we're seeing is that, okay, we're watching NEO and we're seeing that, hey, back in November and even early December, there was a lot of volume relative, to how it's been. And now we kind of see it's kind of cooling off. And we're seeing right now we're hovering around 70 million, 72 million, 73 million shares traded every single day. That's what these volume bars mean. How many shares traded in the day? And so now we're seeing the volume kind of fading out. So what you want to notice is that if you're all of a sudden noticing a lot of volume coming in, but the price is not moving, volume usually precedes price. And so if the price is starting to creep up, that could be a really good indicator of a bullish move going forward. Or if volume starts to fade out, many times you can get sell-offs on lower volume. So the volume's been fading out. I would not be surprised if NEO did kind of crack this uptrend and fell to the downside because the volume has started to fade out quite significantly. Now, is that just because the EV sector is not as hot as it was and we're seeing some more sector rotation? Yes, eventually we'll kind of see the sector rotation back into EVs, and NEO being an EV company, yeah, I wouldn't be surprised to see volume kind of surge back up yet again. And then the last piece I want to talk about is the RSI and the MACD. So what I'm going to do is I'm going to pull up the RSI really quick, and now we go to the indicator section of the chart feature on Webull, and then you pull up RSI. So what we have right here is it's going to tell you over 70 is an overbought stock, which means it's overbought, which is probably up around resistance, or it's at some point probably going to come back down. Of course, stocks can be overbought for quite some time. Stock can be oversold for quite some time. Now, NEO under 30 on the RSI would be an oversold stock. NEO hasn't shown us oversold in quite some time because NEO's been pushing up very, very significantly. But this is also a really good indicator to kind of tell, okay, how does NEO look, right? Is it overbought? Now, when you're seeing NEO pushing up, right, breaking out of some of these areas, yeah, back when it was up over $40, when it first broke over 40 bucks, the RSI said it was overbought for quite some time, and it really didn't pull back. It really kind of pulled back a week later when it was still above 40 bucks, but it kind of slowly cooled off just a bit. So it's not a perfect indicator, but it could be a good gauge. Okay, now we have a cool off period. The RSI has come down below, let's say 50, and the RSI is now below 50. That could be a better spot, and it could be a better idea for an entry. If the RSI is over 70, just understand that, hey, this stock is overbought on the time frame that I'm looking at, and at least that could be a potential negative factor for going long on that trade. Potentially, it doesn't have to be the end of the world, but it's another tool to add to your tool belt. Then we also can look at the MACD, which is going to be really cool for trends. So we can kind of see, hey, the MACD is kind of curling up, or the MACD is curling down. I like to look at these kind of bars, and now what we see, right, is that NEO has come down and gone red, and now we can see these red bars are actually getting a little bit smaller, which is kind of showing us signs that it might be starting to curl back on up. And usually if you want to enter a stock, you want to be entering it as these red bars are starting to curl back on up, and then before we get to those green bars, and start to sell it into those green bars as those green bars start to peak. Obviously, you never know, and it's never perfect, but it could also be a good guide just for kind of broader scale trends, kind of more wave patterns that you can kind of see, hey, things are starting to curl. If you hear people say, hey, this is curling on up, well, the MACD could be a great place to start in terms of identifying how a stock is curling and what that means and where good entries may have actually been. So hopefully that was helpful. That was kind of like a great intro into technical analysis. And this is something that I do all the time with a lot of stocks. I personally look for oversold stocks. So I'll look for stocks with a low RSI. I don't actually use the RSI. I'll just use support. I use resistance, and I say, hey, the stock has dropped off quite a bit and it's sitting at support. That's where I like to buy, and that's why I took that NEO trade here at around the upper 30s, around 40 bucks, because it came down to a solid area of support that we saw from prior history. This area has held up. I like that, and I like the potential for NEO going forward, as I then had some fundamentals, right? We knew that NEO Day was leading up right here going forward, so we had that in the back of our heads as a reason why there may be some more anticipation, there may be some more volume, some more hype going into that period, and that's why that oversold dip was a good opportunity for that. But thank you guys so much for watching. This is definitely one of those things that has helped me massively in my trading. I always go technicals first, and then I back my way into the trade. Then I'll go look at fundamentals. Then I'll go look at the sector. Then I'll go look at, hey, what's in the pipeline? What do they have coming up? Then I'll go look at their cash position, things like that. It doesn't have to be as complicated as you think. Many times, technicals can outweigh fundamentals in the short term, but then of course, fundamentals will outweigh the technicals in the long term. So it really depends on your time horizon, depends on how you see things, but hope this is a good help. I can't stress enough how important this has been to me as a trader. If you're an investor, that's a different story. Buying the red days, it could be as simple as just buying days the stock is down. That's all you have to worry about. But thank you guys so much for watching. Please make sure to check out that link down below if you still want to get access to Weeble's platform and get 2 free stocks up to $1,850 when you sign up and deposit $100. That's there. That's the platform that I use every single day. Also, any links and resources are linked down below if you want to check them out. Hit the like button, subscribe to the channel for more videos just like this, and I'll see you guys in the next video. Peace.